the Nigerian pension industry's net assets will hit 20 trillion naira by 2023, recording an average growth rate of 18%, according to credit ratings agency Agusto and Co. The firm, which disclosed this in a report, also added that it equally expects an improvement in the performance of the industry as operators compete for higher return on investments, improved customer service, and use of technology for operational efficiency. According to the July report from the pension regulator, the National Pension Commission, assets under management, as you saw on that chart, 12.78 trillion naira. Well, joining us to discuss further, Oguche Aguda, who is the CEO of the Pension Fund Operators Association of Nigeria, PENOP, joins us now to discuss. Good morning, sir. Thanks for joining us. What do you make of this forecast from Agusto and Co? Can assets under management really reach 20 trillion by 2023?
Well, I think based on historical growth, it can, and it probably will, because their assertion is based on the past 5 years compound annual growth rate. It's been growing for between 17 and 18% over the past year on a compound annual growth basis. So yes, it should, but we really don't like to focus on the number per se. Really, it's to focus on what has brought it to this portion, and that is the professionalism of the pension funds and strong regulation, sound regulation. So those have come together to be able to ensure that we have a consistent growing pension assets in the country. And I think that's the story, not necessarily the number.
Okay, great. Well, I'm sorry, though. My follow-up question is on the number. Looking at the assets under management, we're hovering at about, I think, 12.78 trillion as of July. Do you think, yeah, there it is. Do you think we can hit 13 trillion by the end of the year? Is that possible?
Well, we should. But then to my earlier point, it's not just about the number. It's what we do with the funds. And it's also the consistency of the growth. And it's shown consistent growth over the years. And it's something we're happy about. And it's something that we need to protect. Just in terms of the way the industry is structured, the PFAs manage the funds, the PFCs or the custodians, and the regulator ensuring that there's sound regulation. So all of this needs to continue to work together to ensure that growth will get there. 13 trillion should, but like I said, it's not really about the number. It's really about the effectiveness of the fund managers, because as you know, the fund is number one, contributions and the investment returns. So as long as the investment returns are strong, as long as contributions are strong, which we need to continue to do, then it should reach that number and higher than that.
Great stuff. So, okay, to that point, can operators who are competing for higher returns on investments improve the performance of the industry?
Yeah, definitely. I think you'll see that going forward now with the transfer window, with operators competing for higher returns. And that should lead to an improved industry because, number one, the AUMs will grow as returns become higher, then the AUMs grow. As returns become higher, meaning that they are probably investing in alternative investments or investing in the real sector and affecting the economy. And once they invest in the real sector, then creating more jobs. As they create more jobs, then the RSA holders increase. So it's a positive loop, which as they focus on increased returns, it should affect the economy and the industry as a whole. So yes, focusing on improved returns will affect the industry, definitely.
Great stuff. While we're on the subject of returns, I have to ask you about inflation. Yeah, isn't that a major factor, when you're, looking at pension returns? Because I think we're expecting inflation for August this week. When you look at inflation numbers for July, they're still up there in double digits. So how do you factor that in?
Yeah, so if inflation is north of 17%, then if you want to get real returns, you have to get returns above 17%. But then the issue is with what risk are you using to get those returns above 17%? You want to take a higher risk and then you jeopardize the fund so that you lose everything. But that's the job of fund managers, and that's the job of the pension fund managers to be able to see, how they can beat inflation and to ensure that their returns are above inflation. So you get a real return. However, what I always say is that, because it's a pension fund and by all stretch of imagination, you probably will be working for at least 20, 25 years, perhaps even 30 or 35 years. So if you look at returns in 1 year, it will skew what you're looking at. So you need to look at it over a number of years. So it's not just 1 year, so over a number of years. And the job of the pension fund managers is to see how they can beat inflation over a number of years, not just 1 year. So this year, last year, inflation has been high, but we'll see how that goes on over the number of years versus the inflation, versus the investment returns. I beg your pardon.
Great stuff. I want to ask you about technology. How can technology improve operational efficiency in the pension space?
Yeah, so we've got about 9.4 million RSA holders. And to be able to serve these RSA holders, you need technology. So technology will help us as we reduce our cost to acquire new customers and cost to serve current and new customers. So technology will bring the cost down for the pension funds. Technology will ensure that we're able to reach more people. Technology will ensure that we're able to serve people more effectively, quicker, improve customer service. Technology will also ensure that the operators reduce their costs, and that is going to bode well for the industry, bode well for everyone, and bode well for the shareholders also. So technology is really a game changer, and it's something that we are pushing in the industry to ensure that we reduce both our cost to acquire customers and our cost to serve customers with just the way we structure our transactions, our business, and also even in terms of shared services also. So technology is a game changer, and it's something that we are pushing in the pensions industry.
Awesome. Just about a minute and a half, couple minutes ago, how would you assess quickly the performance of micro pensions for the self-employed?
Yeah, to be honest, micro pensions hasn't caught off that well, and for a number of reasons. But that's the growth frontier, we believe, for the pension industry, because a large number of the labor force are in self-employed, micro businesses, small businesses. So that's the growth. Currently, we have about 11% penetration with the pensions. So there's a considerable amount of growth in that area. So it hasn't done well, but it's something that is what we're focusing on for the new frontier. And like you mentioned, technology is something that we're looking at for micro pension, just in terms of serving those classes of people in the micro space. Technology will be the game changer there. And that's where we see the growth coming for the pensions industry.
Great stuff. We're out of time, but you know what? We have to have you back, because I wanted to talk about the RSA holder. So we need to have you back. Oguche Aguda, CEO of the Pension Fund Operators Association of Nigeria, PENOP. Thank you so much for joining us to discuss pensions today.